Zomato's board has approved the much-anticipated acquisition of Blinkit for 4,447 crores in an all-share deal. It has also okayed the 60.7 crore cash acquisition of Hands-on Trade's identified business, essentially the warehousing and ancillary arm of Blinkit. Now, Blinkit, which is previously known as Grofers, changed from being an online grocery delivery business to a quick commerce business in December 2021. Competition in the quick grocery segment has been heating up and has well-funded players like Zepto, Swiggy, Instamart, Big Basket Now and JioMart Express. Zomato has already had a 9.3% stake in Blinkit Marketplace and 8.4% stake in HOTPL identified business. Zomato had also extended a debt worth 1,125 crores to Blinkit earlier, and the same would now be acquired by Zomato as part of the transaction. Post-acquisition, Zomato's existing shareholders would see a dilution of 8%. The transaction puts the value of Blinkit at 4,890 crores, implying a valuation of 20.7 times FY22 revenues. Zomato would issue 62.9 crore shares to Blinkit investors, and both brands will be kept unchanged. Now, we at MC Pro did a quick check on how each of the top 4 quick grocery delivery businesses performed by placing an identical order of 8 items, a mix of vegetables, fruits, personal hygiene, cleaning products, snacks and bakery items. We found Zepto to be the cheapest among all, 29% less than Blinkit thanks to the 26% discount on the bill value. Only Swiggy is charging delivery fees on its orders, which are 2-tiered, 18 rupees for immediate orders and 8 rupees for scheduled orders, generally which are delivered 3 to 4 hours from the order time. India had 44 unicorns in 2021 and 13 in 2022, taking the total to 100. In the last few months, the high profitability expectation of investors have led to tightening of funding and cost cutting at many such companies. Blinkit turned unicorn in March 22 when Zomato picked up a 9.3% stake. However, it's now being acquired for around $570 million, which is a 43% compression in valuation in just a matter of 3 to 4 months. In the food delivery business, delivery charges are around 80 to 90 rupees per order, divided between the consumer and the delivery platform. Assuming similar charges when paid out by Blinkit, it could be as high as 60 to 70 crores per month on total orders of 7.9 million as of May 2022 orders. Furthermore, we estimate that Blinkit's per order loss works out to be around 136 rupees on an average order value of 509 rupees. And it would incur a loss of 84 rupees per order at the contribution level. Therefore, a break-even will take many years. Blinkit is unlikely to pass on the entire delivery cost to the end consumer without affecting the total orders in the current market, where Swiggy has already announced a 700 million investment in Instamart and JioMart Express is also rapidly expanding. Typically, a household buys groceries with a budget plan and prefers to have a larger catalogue. The 10 to 15-minute delivery model has limited adoption in metros and Tier 1 cities, and by design, it is meant to cater to last-minute immediate grocery buying. This tends to have a limited order value. In our Q4 FY22 note, we forecast an FY22 to 24 revenue CAGR of 46.5%. This zooms to 53% once Blinkit's estimated revenue is taken into account for FY24. In our base case estimates, Blinkit operations would add a loss of around 1,100 crores to Zomato in FY24, effectively pushing the group profitability scenario by at least 2 to 3 years, if at all. At the current market price, Zomato, excluding Blinkit, is trading at an FY24 market cap to sales multiple of 6.2x, which is reasonable. However, post the Blinkit acquisition, Zomato's losses would increase, delaying the visibility of profit, like I said. Therefore, conservative investors should exercise caution. Among risks to watch are regulatory approval for the acquisition and intense competition, which may increase cash burn and losses.